Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is July 11th and prices were updated on Friday. The economy is still taking hits from inflation and the subsequent interest rate increases, but the good news is our portfolios are unchanged or slightly up from last week. We're going to check in with the stocks that we're watching on the Toronto Stock Exchange, as well as our US stocks on the New York Stock Exchange on the NASDAQ. And we're also going to check our 4 fantasy portfolios on the Canadian market. Our $5,000 portfolio is back to the break-even point of 0% from the start of the year, up from minus 1% last week. Our $10,000 portfolio is still down 2% on the year, but holding steady. And our $25,000 portfolio is still down 5% on the year, unchanged from last week, also holding steady. Our $100,000 portfolio rose slightly to minus 7% on the year, which is up from minus 9% last week. These are tough times. The worst the market has seen since 2008, but hopefully we've turned the corner and prices will continue to rise. So things to remember, the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. And dividends can be used to buy more stock. Dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, the others will tend to go up. And when the market takes a tumble, like it has been for the whole of 2020 so far, this is an excellent time to buy. These stocks are undervalued and you're going to get a real deal. So either add cash or reinvest your dividends. And just as a reminder, this is for information purposes only, and I take no responsibility for any gains or losses you experience in the market. Just to recap about me, I haven't done this since the beginning of the year. Every stock shown in my list I actually own. I'm Canadian and I have invested in blue chip stocks since 1983. I started with just a little more than $20,000 and I have grown this by an amazing 7,300% in 39 years. I've added cash savings every year of my life. Some years I added a little less when I was raising young kids, I was lower on the totem pole at work, or I was being out of work, and some years I was able to save aggressively after my kids were raised and when I had a great savings plan at work. I pay attention in my portfolio at least once a month, and I let my stocks ride. I buy, but I rarely sell. So taking a look at our Canadian portfolio, our manufacturing and industry, we actually have a green spot here. Thomson Reuters has risen 2% since the beginning of the year. We're still down an average of 13% in manufacturing and industry. For consumer goods and services, we have 4 stocks that are actually in the green now. Saputo, Molson Coors, Metro, and Loblaw. Loblaw actually has a great return of 23%, which is bucking the trends of the market this year. Finance, we're still in the red and we're down 20% overall. Resources and commodities and utilities, which are the 2 strong sectors this year. Resources is up 10% and utilities is up 7%. So the overall Canadian market is down 7% on the year as an average. Taking a look at the US market, which is a little more hard hit. In manufacturing and industry, we still have 4 that are in the green, but we're down 17% overall. Consumer goods and services, we have 5 in the green, and it is showing a minus 7% drop on the year. Finance in the US, just like on the Canadian side, it's been hard hit. So the US finance market is down 26%. Resources and commodities in the US aren't doing as well as they are in Canada. So the resources and commodities in the US are down 5% and utilities in the US is down 8%. So the overall US market is down 14%. However, that's a rise from minus 15% last week. So let's check our fantasy portfolios. Our $5,000 portfolio, we are sitting at $5,049. Which is up $6 from last week and $34 on the year. So it's holding steady, even though the market is in terrible shape. Our $5,000 portfolio, at the present time, we really haven't lost anything. Dividend income It rose last week because we had several companies raise their dividends, but there's no change to this week. We are showing $202.16 payout on the year for the $5,000 portfolio. Our $10,000 portfolio is still holding steady at a minus 2% since the beginning of the year. So we're showing a total of $98.94, which is a drop of $17 from last week, but it still is up $58 overall on the year. Our dividend income for the $10,000 portfolio is $374.06 per year. Our $25,000 portfolio is also holding steady at minus 5% on the year. We have a total of $23,832, which is a $30 gain from last week. However, it's a $1,027 drop since the beginning of the year. Our dividend income, our $10,000 portfolio pays out $759.80 per year. Taking a look at our $100,000 portfolio, we have risen from a minus 9% drop last week to a minus 7% drop this week since the beginning of the year. Our total is $91,650, which is a gain of $1,720 from last week, but we're still showing an overall annual loss since the beginning of the year of $6,907. So we are trending upwards. Our blue chip stocks are holding steady. So there's no big losses, but there's no big gains. So we're going to keep watching and hope that the rest of the year will be a little bit better. So join me next week on Monday for our next update. And thanks for watching today.